Have you ever had a payout request denied by Apex Trader Funding? If the answer is yes, then you probably opened a ticket to ask why, and you probably got a reply saying you broke a rule, probably the 30% rule or the DCA rule. Did you know that the 30% rule actually goes away at one point with Apex? Later in the video, we're gonna go over when that actually happens. Left in a state of confusion, you were probably thinking that it was all scam, but the rule was in your PA agreement, the one you signed. You probably just overlooked it. In this video, I'm going to explain to you the 30% rule. I'm going to explain to you the DCA rule, and we're going to make sure that you can get your next payout approved. These two rules, the DCA and the 30% rule, only apply in your funded accounts, aka the PA accounts. So I just wanted you to make sure that you understand that these rules do not currently apply in your evaluation accounts. Now smash the like button and let's go ahead and get into this. All right, guys, so very important. I want you to understand something. The 30% rule only applies at the time that you put in for a payout request. So for example, let's say you're in a $50,000 account. You know you have to have a balance of profit of $2,600 in order to put in for a payout request during the payout time frame. Okay, now let's say on day one you made $3,000. That's obviously way over the 30% rule. That doesn't mean that you lose the account. That doesn't mean you get dinged. It just means if payout request time comes around and you're over 30%, you might as well not even put in for that payout request, in my opinion, and just keep trading. Okay, so here you have it directly from the Apex Trader Funding website. 30% consistency. At the time a trader submits a withdrawal request, the profit balance in the account cannot consist of more than 30% of the profit balance from a single trading day since the first trading day of the PA account. So what does this mean? Let's use some examples. So for example, let's say you're in a $50,000 account. For that, you need $2,600 in order balance of profit in order to get a payout request. Let's say on day number one, you make $1,300. Guys, that's halfway to $2,600. That means that single one day, on day one, you made 50% of the amount needed to get to 2,600. Let's say on day number two, you make another $1,300. Bang, you reach 2,600 bucks. That's the minimum you need in order to request a payout. Now, the remaining days, you take some trades here and there, and you wind up with $400 in profit leading into the remaining 8 days of trading. Remember, you need 10 trading days in order to qualify for a payout request. So now you have 10 trading days. You've made a total of $3,000. But 2 of those days is already responsible for a huge amount of the money in the account. Now, if you put in for a payout request in that example, you're gonna more than likely get denied because you made way too much money on just 2 of the days, on just 1 of the days really, and you have $3,000. Now, if you have $3,000 in profit in the account, then you wanna go ahead and do this formula. You're gonna get the $3,000 and then you're going to multiply them times 0.30. This is going to equate to $900, meaning that no one single day should be over $900. Otherwise, you're over the 30% rule. And of course, you already know that you have not 1, but 2 days that are actually $1,300. Thus, you've already violated the 30% rule. So that's always what you're going to do. Let's say you have $4,000 in profit. Well, you're going to go 4,000 times 0.30, that's going to equal $1,200. And then now you know that you can't have any days over $1,200. So now think about it this way. If you have multiple days of $1,300 in this scenario, then you're going to have over $4,000 in profit in order to bring that ratio down and get it to 30% or under, because no one day can have 30% of the profit. So the way you fix this is very simple. Don't put in the payout request, in my opinion, and just keep trading and keep adding profits to the account to the point where no one day is responsible for more than 30% of the total P&L on that account. That's the formula you want to use in order to stay within that 30% rule. Now, remember I told you earlier that the 30% rule does eventually go away with Apex Trader Funding and it no longer applies to you? Well, let's see how we get around that 30% rule and when it applies. As we dive in here on the Apex Trader Funding website, you can see here the 30% consistency, what we read earlier. Now here we go, let's take it from here. The 30% rule no longer applies after your 4th month of withdrawals. So if you've taken at least one withdrawal per month for 4 months, after that 4th month, that 30% rule doesn't apply anymore. Or if you're just a badass trader and they stick you in a live prop account, that's another way that you get away from the 30% rule. So here, the 30% rule no longer applies after your 4th month of withdrawals or once you have been moved to a live prop trading account. This rule is set in place by Apex in order to try to keep away what I call the lottery scratch-off trader. People that just try to come in and on day 1 trade max account size, try to make a buttload of money, and then they switch to smaller size the remaining 9 days and then think they're going to get a payout. That's not how it works. And I know a lot of people get upset about it, and they'll probably get upset about it in the comment section. But the reality, that's not how it works. If one wants to trade their private account that way, by all means, they're always welcome to do so. I could do it on my account if I wanted to, right? But these are their accounts and just their rules. Guys, if you want to open up an account with Apex, use code Jesse, all caps, Jesse, JesseW, when you're checking out so you can get the best possible discount available, the deepest possible discount available at the firm going on right now. Link in the description and comment section of this video. All right, now there's another little trick I want to show you. This trick is something that I don't really care to subscribe to and do myself because of the simple fact that I feel it's going to limit me as far as my profits go. And I don't mind trading a little bit longer if I go over the 30% consistency rule on a very hot trading day. When the trading is hot, I push myself. I'm a type of person that takes 1 or 2 trades a day. But if trading is hot, I will take 3, 4, 5, 6 trades in one day, and I will pack on that profit because I'll just keep trading longer and get myself back, to 30% or under on that rule. But if you want to use this trick, then all you have to do is, let's say the $50,000 account where you have a $2,600 minimum. You have to go, the formula works with the minimum profit that you need in order to request a payout. Well, you get that minimum and you just multiply it by 0.3. Now, watch here. As we do it with the calculator real quick, $2,600, 0.3, which is the 30%, gives you $780. And that means no one day of trading should be over $780. But I feel like I say that limits me because now if I hit 700, if I hit 780, if I hit 750, I'm going to stop trading that account in the day. And if trading is hot, why would I do that? Just yesterday, I made over $1,000 in multiple $50,000 accounts. So I'm not going to, do that and limit my profits. But that's just me. That's just another trick that I wanted to show you. All right, guys. So next we have very, very big topic on social media, DCA, dollar cost averaging rule. So the dollar cost averaging rule is found right here on Apex Traders website. They go into it in detail. Okay, they tell you exactly what to do, how to do it, how it all works. And you can go over it there on the website as well. What we're going to go over here is exactly what the rule means and how to get around it. Because you can DCA, but there's only one way you can do it. All right, so let's go ahead and jump into this. First things first, what is DCA? What is dollar cost averaging? So dollar cost averaging is when you open up an initial position and the trade goes against you. If you're long, the trade pulls back, okay? Or if you're short, the trade pushes upward. The point is you open up a position. Let's use, for example, you open up a long at 18,010, okay, on NQ. You open up that long there and the trade pulls all the way back to 18,000 and you add a position there. You open, right, another position, you add to your position. You add there another long at 18,000 and it pulls all the way back down to 17,990 and you add again and it pulls all the way back down to 17,950 and you add again. That is dollar cost averaging. You're averaging your position downward, hoping and praying that you get a bounce back. Sometimes it's based off of levels that you have pre-identified and you're just opening up and scaling into a position. While it might be something that can be done, and while it might be something that is part of your strategy, Apex does not allow it. And it doesn't matter what we think because it's their house and it's their rules, right? And most traders, it seems as though they just don't do that. And I'll tell you what, dollar cost averaging in long-term investing, 2 thumbs up. Dollar cost averaging and just hoping and praying, 2 thumbs down when it comes to trading. Now, can you open up a position within a level? And this goes beyond Apex's rules. Let's talk about if we were trading our own private account. If we were trading our own private account and we identify a 100-point zone and we dollar cost average in it, looking for that trade, I don't think it's wrong. I don't think it's a bad trade, as long as you have risk that's predefined and it's not going to blow your account, right? That's the only way I think it's fine. Now, as far as Apex goes, you're not allowed to dollar cost average like that. They don't want you dollar cost averaging into oblivion, because you're going to blow up accounts left and right, and they don't want you dollar cost averaging. Just simple as that. But you are allowed to dollar cost average once. Let me show you how. So now you know the type of dollar cost averaging they don't want you to do. They don't want you to open up a position here and it goes against you here and you add, and it goes against you here and you add, and you go against you here and you add, and then you add and you add until either the trade goes in your favor or it blows up. You put in a payout request and they see that you dollar cost averaged, they're going to deny it. So how can you dollar cost average? Well, they allow you to do one DCA, just one. Check it out. It's right here on their website. Permitted and accepted use of DCA scenario. Apex will allow traders to enter one additional entry only into an open position that currently has a negative P&L, but only a single additional entry execution after the initial entry, not multiple additional entries. So if you opened up a position here for a long and you drop into this zone, and you know that this is a bounce zone, you're allowed to add one more time here. Better hope it bounces and it doesn't stop you out. If it stops you out, it's no big deal. You just lost money. And I would imagine if you're a trader that knows how to trade, you lost an amount of money that you were perfectly fine losing in that trade because it was part of your trade plan, right? But we can go over trade plans in another day, or you can check out some of my other videos. So they will, you open a position here, you got to drop into a different zone that is support as well for your long. You can add once there. That's it. Now, how much can you add there? I see people all over social media talking all sorts of nonsense. And it happened to me one time earlier in the year when we went over these rules. So if you open up, let's say we're trading minis. If you open up a position with one mini up here and you get a drop into your next support zone, you can add one mini there, or you can add two, or you can add three, or you can add four. There is no rule that says how many minis you can add on that one DCA that you are allowed to have. Don't believe me? But only one additional entry execution after the initial entry, not multiple additional entries. Contract size of the additional entry is not regulated, and it is at the discretion of the trader. Just be sure to keep good risk management practices. DCA has always been prohibited and listed as prohibited in the Apex PA contract and FAQ on the website. This allowance for one additional entry is an update and an easing of the restriction. You're allowed to DCA, you're just only allowed to do it one time, meaning you open up a position, whether long or short. Let's say we've already done the long, right? Let's say we open up a position in a short right in here. The trade goes all the way up here towards the top end of the camera. That's resistance. And we know it's resistance based off of the chart. It has a high likelihood of being resistance. Well, we're going to add a short right here, and we're going to look for that drop back on down here to the support zone. You can do that. You can open up a short here, add to your short here, and look for that drop and fade. Now, if it breaks over that resistance zone, it is my opinion that you should stop out of that position and take the loss, because it's within, or should be within, your risk tolerance, and reevaluate the chart and go from there. Well, guys, that's it. Those are the two most controversial trading rules at Apex. I hope this video gave you some clarity. Any questions at all about any of the rules, drop them in the comment section below. Let's go over them together. And if you have any ideas of what you want me to do a video of, please drop it down there. Smash the like button, subscribe to the channel, hit that notification bell so you're alerted when I upload my next video, and I'll catch you on another one. Peace.